Hello guys, welcome to my YouTube channel. It's your boy AUDJPY. So a quick one here. I caught this trade earlier and I just wanted to give you an update on how this is playing out. Okay, so my buyers, how did I call the trade? What was I seeing? What did I look at to call this trade? Okay, so like I always would say, you always want to start analyzing from the higher time frame. And for me, my higher time frame, or the highest time frame I look at, is the daily time frame. Alright, so I look at the daily time frame, and from the daily time frame I find out what the market is doing overall, and then from that I scale down and place my trade. Alright, so looking at this, you want to come to present price, look at the nearest price action, what's happening here. You can see that there was an impulsive phase. There was an impulsive phase right here. Alright, there was an impulsive phase right there. That was one of the things I saw. So you would see an impulse here. Alright, so the whole of this can be seen as a correction. Okay, the whole of this can be seen as a correction. This can be seen as a correction. So after a correction, what happens? There's supposed to be another impulsive phase. All right, so the market basically just moves in impulse and correction, impulse and correction. So once we've seen what the market is doing on the highest time frame I look at, which is the daily time frame, you realize that this is the impulsive phase. After the impulsive phase, what do you expect? We expect a correction, and that's exactly what we got here. So the market gave us a correction here. The whole of this is the correction the market gave to us. Okay, the market gave us this correction. So the way I like to look at the market, I like to look at the market as such. So look at this now. You could actually see this as from here like a double bottom here. All right, so this became like a very relevant area to look at. You'll find out what the market is going to do. So most people would trade a break and retest. If you traded a break and retest, well, this would have been a good trade for you, a good sell. But I didn't sell the market at that point because I'm not a breakout and retest trader. So this would have been a good breakout and retest trade for those that trade breakout and retest. Well, that's not what I trade, so that was not what I was looking for. I was waiting for a third touch, so to say. So I already saw that this was the breakout of this potential double bottom, so I expected the market to come from another touch here, and I would watch what the market was going to do. So I watched what the market was doing, and it was obvious the market was not going to create another correction here. If I saw a correction, if I saw a flag pattern this way, I would have probably looked for a sell to take the market down to the next point of value. Next point of value for me would have been this point down there. So if I had seen this correction, something like that, I would have taken a sell down to this point. That would have been my bias, but that didn't happen. All right, the market didn't give me a reason to look for a sell, but instead what happened was that the market formed a correction upward. Okay, so market formed this impulse. The market formed this impulse and then gave me this correction. So the moment I saw the impulse correction, don't forget, this is exactly what we saw on the daily chart. On the daily chart, we saw an impulse and a correction, and we were waiting for the next impulse, at least to this level. All right, that was what we were waiting for. So someone asked, one of my subscribers asked what the 90% rule is about, so I'm just going to mention it here now. So the 90% rule basically states that 90% of the time when, excuse me, let me just take off all of these drawings from the chart. So 90% of the time when the price breaks a descending channel or an ascending channel, it always gets to the end or the beginning, as the case may be, of that ascending or descending channel. So market always gets, for this, in this case now, the whole of this from here down to this point is the descending channel. So the 90% rule states that 90% of the time when the market breaks this from here, the moment this trend line is broken here, I expect the market to go all the way to this 90% rule. All right, all the way to this point. That's what the 90% rule is all about. So if I have a trend line broken on a descending or ascending channel, I expect the market to go all the way to the beginning of the trend line. All right, so that's basically what the 90% rule is about. So it just states that it's going to go all the way up 90% of the time. So if you look at the chart, let's take some step backward and see what happened in the past. Let's see what happened in the past where this actually played out. So if you look here, you'd see an ascending channel this way. You'd see an ascending channel like this. Okay, see an ascending channel like this, and you expect the market to come all the way down here. So if I took a sell, I would expect the market, well, even though in this case it didn't really get there, but you expect the market to come all the way down here. That's what the 90% rule is about. So another example would be up here. If you look at this, somewhere here you see another price action here. You see what the price did there. It formed something like this. Now the moment this was broken, we expect that at least the price is going to come all the way up here, at least. You see, and that's what the price did. It came all the way up to that point. So that's the 90% rule. It just helps you manage your trade better. All right, so when I take a trade in that sense, I always expect the trade to get to that point. That's basically what the 90% rule is about. And yeah, it's pretty straightforward. If you go through the market, just pick up any chart and go through price over the years, you would see that it has always respected the 90% rule. Okay, now what's the update I want to show us? So I called this trade earlier, and let's see what the market is doing. The trade is playing out nicely. So I was just explaining what I saw that made me enter the trade. So I saw this descending channel and I saw a break out of this channel. This was a correction. I couldn't enter here because I wasn't actively in the market. This was another correction. I'm not even sure what I was doing, but I missed that entry as well. But after that, I saw this falling wedge, and then once I saw that, you want to call it a flag, guys, forgive me, I mix up those names, but it doesn't really matter. What matters is you know what the structure represents. Okay, some of those names are just complications. You're trying to understand what a shooting star, a rising star, well, forgive me, I might mix up the names of all of this, you know, falling wedge, rising channel, descending channel, ascending channel, what's it called again, what's the next thing, flags and all of them. Well, I might mistake them, but one thing I know and one thing you should focus on is that you want to know what each of them represent. If it's pointing downwards, it tells you the market is about to go upward. If it's pointing upwards, it tells you the market is about to go downwards. Okay, so at the time, this was what I saw. I saw this falling wedge or flag, however you want to call it. And then I saw a breakout of this structure, and I saw this correction. So this correction was my entry. Actually, this little correction here was my entry at the time. Okay, I saw that correction and I placed a buy stop order over there, just where you have that. So my buy stop order was at 93.377, and then it was a 15 pips entry, right? So as you can see, 15 pips entry, and presently this trade is running at what's that now, at 5.3% thereabout, but I have locked in profit at 3%. So no matter what happens, if this trade decides to go against me, if it decides to reverse from that point, well, I'm happy to take 3% from the market and look for another opportunity. However, the potential is very much still there. All right, so this was a point of concern for me. I was looking to see what the market would do there. I was waiting to see if there was going to be a rejection here. So if the market had rejected there, I would have moved my stop loss tighter, because that would have been a sign that, hey, the market is probably going to go down. All right, so but at the close of this 1 hour candle, I saw a rejection actually at the 1 hour candle. So when I saw that rejection, I came to the 15 minutes and I saw that this actually closed. You know, this candle closed bullishly, very strong bullish candle. So I was like, okay, at this point I think my stop loss was at 1% already, somewhere around here. I moved my stop loss to around 1.1%. So at that point I was ready to, you know, take 1% from the market. That way I know I'm not losing anything. So but after that happened, I just realized that okay, let's wait and see what the market does next. So the market broke that point, back to the 1 hour time frame. You see that the market broke that point with another strong 1 hour candle. I saw the strong 1 hour candle break that supposed resistance point. I was like, okay, so what's the market going to do here? I just moved my stop loss to 3%. So now the market is sitting on 3% profit. Whatever happens, what I'm expecting the market to do is to form a flag, something around this nature. I'm expecting the market to do something like this. All right, so the market is supposed to do, or I'm expecting the market to do something like this and give me another entry like so. So if I see an entry like this, I would scale into this trade. I'll place another buy stop order, something like this, with at least like a 30 pip stop loss. Well, it depends on how narrow or how wide this correction is going to be, but I expect the market to form a correction, say later today or tomorrow. Okay, so I'm recording this video on the 2nd of June. I'll probably upload this on the 3rd of June because I'll probably will be busy. I'm just recording this now on the 2nd of June, but I'm sure I'm going to have time to upload this on the 3rd of June. So whenever you're seeing this, I just needed to point the date out so you understand what I'm saying. Now I'm expecting the market to give me this correction on the 3rd, around the 3rd of June, and this might actually happen sooner than that. It might happen today, and then by tomorrow I can get an entry here to scale up and take this all the way up. But I'm expecting the market to get to this point, so I'm not going to move my stop loss too tight. But whatever happens in the market, I'm ready to take 3% from the market. All right, so this is the quick update. I'll give you another update by tomorrow as we continue to manage this trade. So all that is required now is trade management. I'm just going to manage this trade and see how many percent I can take out of the market. Thank you so much for watching today's video. You guys are amazing. Please go ahead and subscribe to my channel, like this video, and share this video. Let's get this video to as many people that need to see this. This strategy is amazing, and I'll continue to share the knowledge I have on this strategy and help everybody win as much as possible. Thank you for your time. Do have an amazing time ahead. Bye.